like you did.
Okay.
Okay. So, like, I
Hold on. Is that working? Oh. Alright, cool. No, I got video now. It's just... I was in the middle of doing quant shit with nerds. We're working on some new color schemes for Gamma Strike. I think we're going to switch things around so stuff's like a little bit more intuitive for you guys. Can you remind us what Prowid percentages represent again? And how you get those numbers without... There's no secrets. What are you asking about? Road percentages? Are you talking about this shit? Like this? This is a Monte Carlo. So this is a distribution of potential outcomes based on like like 1,500 prior candles. I heard Gamma Strike predicted Maple having to show her feet for 10k. Is that true? No. Yeah, no problem, slot machine. How does a program Maple to comment on YouTube? Huh? That's not nice. Anyway, how's everyone doing? Joking, lol. Hmm. Good, you? Not great, but I'm hanging. I had a night from hell. Although it wasn't that bad. I just ended up spending far more time driving around fucking Long Island on my only day off than I wanted. I've been on solo barrel duty since Christmas. She finally just up and leave. I knew it was gonna happen. She's not here, if that helps, Carl. Tell the good parts. Okay, so I went at like 5 o'clock, 6 o'clock. I think I went to take my mom to her friend's house in fucking Montauk, where she's like spending the rest of the weekend. Um, and on my way out of the city, I got rear-ended on the Brooklyn Bridge, and then 3 hours later, when I got to Montauk, my mom took her bottle of water and my car keys out of the center console, jammed them in her purse, and went inside her friend's house. 2 hours later, I got out of the car to pick up like a energy drink slash maybe a coffee. I hadn't really decided. And I stepped out of the car and I turned the car off and I was like, where the fuck are my keys? Like I like tapped my pockets and they weren't there. And then I spent an hour on the phone with like the like SOS, like the pseudo OnStar service, trying to convince them to start my car, which they accused me of stealing. Um, and so and the like the phone app wouldn't start my car. Like it would start it, but like if I hit the brake, it would just turn back off again. Rear end by drone? No, it was like some Uber driver. And then I had to take a fucking Uber back to Montauk with the world's slowest driver. And 6 hours later, I got back to my car, went home, got in my door, realized I forgot to buy cat food, and I had to walk in the rain over to the grocery store to get cat food, and then come back home. At which point it was like 3:30 in the fucking morning, and I was just done. No wonder you hate leaving your apartment. Yeah, yeah. Thank you, Mike Mia. Good afternoon, dude. Sounds like it's time to upgrade to the 2004 Corolla to something newer. I used to like with my Beamer, when I had my Beamer and my Mercedes, if you like lost your keys or locked your keys in the car, they would unlock it. They would start the car for you so you could drive it back home. Like it was, but this car now, they're like, fuck you. You couldn't Uber cat food at 3 in the morning? It'd be hard. Usually you can't find a driver to pick up the order that late at night. Jesus, you really know how to party. Yeah, yeah, it was a super fun, good time. Did you at least bang your mom's friend? No. Also, ew. She's like a 70-year-old crystal mommy who smells like patchouli, and her husband's worth like 230 mil, which I don't understand for the life of me, but they're very happy together. She would make you a man. Yeah, I'm alright. I'd rather stay a boy in a man's body. Everybody in Montauk's rich. So it goes with the territory. Except for the poor people that rent apartments and work as waiters. What's up, Cobra? I've surfed there before. Crazy money. Yeah. It's definitely a weird place. All right. Let's get into it. What do we want to. What stocks do we want to look at today? I've catered private homes up there. Everybody I know out there has a personal chef, and it makes me want a personal chef. Can we just talk about bonds? We can later. Sound. Well, we'll go over the market after we do individual tickers. Why is Fubo on here? FSLR. Wait, who is that? BTU? AMD. Zom is getting pretty cheap, I know. DVN. I don't want to look at RCAT. Why are you trying to make me do that? I'm not looking at TLT again. Tesla Pets. Why not RCAT? I put it on there, but really? I don't want to look at stupid Wall Street Bets plays. Haha, dag. FSLR has high short interest because the incoming administration is probably going to crush clean energy. Yeah, we can take a look at HIMS. Roblox. Apple. Alright, that's enough. That's gonna take me like at least an hour to get through. Alright, let's start with Beyond. We got a big spike, some price improvement over the last couple of days. Things are starting to pick up here. We'll go over to GS and take a look at some stuff. So we got an uptick in vol on the IV30. That's been going on for like a couple of weeks. This is what kind of got me bullish in the first place. 30-day vols continuing to rise. We're starting to see realized vol come up, but it hasn't come up very hard yet. IV10 spiked pretty hard. And then IV out on like the 60, 90. Mm, not doing much yet. So nothing further dated really coming in, but there's definitely a bit of interest around between like 10 and 30 days. um Take a look at Greeks here. Gamma Max is starting to come down again, which is usually a pretty good sign. We've got Delta neutral at 635, Gamma neutral at 9. I would probably want to see both of those trim, but the cross and close over $4 puts Gamma exposure on the chain slightly positive. It's only like $50,000, but it is slightly positive, and I believe, yeah, this skew, like the dealer adjusted delta exposure is also moved positive. So that's probably a fairly good sign. It's been a very long time since VN has moved under DN here. And so we might actually be getting an abundance of sold puts, which is a very good sign. See how rapidly VN has been coming down. This is probably due to put selling. It's gone from like $10, now it's down at like 5. And we can go out and look at the like we can see, this is where they're selling the puts, right? It's pretty fucking obvious. A lot of those are for Jan. Some of them are a little further out though. We got May and like 13,000 or so out on 2026. And then the $4 strike, actually quite a bit in May. But also a lot in for Jan OPEX. That means we got some put delta further out on the chain as well. I don't think these are protective. They're very likely sold. And we're getting a little bit of call interest at like 450. There's a decent amount of call interest at 5, and that's got some theta on it. 6, also a little bit of theta. Feb, well, like 4,000 out in Feb and May, and like 4,700 for the OPEX expiry, which is not nearly as much. But I have a feeling if this broke over 6, we'd start to see a lot more interest. And some of these, like these farther dated calls, further out of the money, like the $8 got a lot of interest towards the end of 2026, which is interesting. $9 seems to be kind of, and this is where gamma is neutral. So this is like GN right here. The $9 seems to have not too much longer dated interest. We could take a look at Vana. Yeah, I could see things picking up a little bit on a breakout above 5. I think these are sold. I mean, I know some of them are, at least. Some of them are mine. I've sold quite a lot of synthetic longs at 5. Um, but yeah, if this got back above GN, it could do some crazy things. But I would say that maybe like a test of DN is possible now that it's inched its way above 4. But the fight for 5 is still going to be a nightmare. DM is at where on Beyond? Dion's at like $6 and change, 635. GN is at $9. It used to be that this would come up and like fucking tap Gamma Max and then fail. Back when it was still getting reg showed. But we haven't seen it reg showed in quite some time. So I don't know if we'd get that same reaction. Like the last run it didn't come anywhere near Gamma Max, like barely broke Gamma Neutral. And so I mean this could be different, but I do like that VN is moving a lot closer to spot. I think that's maybe a good sign because we probably haven't seen an environment like that on it and maybe ever. Well, at least not since 2022. So it's been a long time since there's been any kind of significant put interest. But I mean, like Delta is still dog shit compared to where it's been historically. Um, so we definitely want to see that pick up a lot more. Even back here, we had a lot more Delta. Early like early mid 2023, late 23, early 24. There was more Delta than there is now. So I wouldn't expect any move to the upside to last for long, but I think it's probably going to get one. This kind of looks like the BBBY setup, if I'm being honest. Like just a shitload of concentration at one strike where all the puts are being sold that's in the money. That's what happened on Bobby right before like it snapped up and went crazy for like a couple days. I mean, it is. I'm not teasing you. That's what happened to Bobby before they ultimately died. I don't think Bobby had a catalyst. It just the positioning just broke and the market maker had to reprice options. YOLO, we're so back. It's fucking definitely degenerate, but it could do something. All right. Next up is what? Sound. So I sold some spreads on this. I closed the week below 25, which is all that I really wanted out of it. And I got some decent money for 50-cent spreads. I mean, they're fairly low risk anyway, but I think I got between like 28 and 30 on them, which is better than 50% return on risk. And so now, if you guys read the Pickles pick, hold on one second. I gotta actually answer this. Okay, never mind. I didn't have to answer that. So if you read the Pickles pick, there's a bunch of supportive like call positioning that falls off or fell off at the end of this week. And so if we go look at the chain, we should see a bit of a shift in how the bulls are positioned on this. So this is obviously well above Gamma Max, although Gamma Max isn't coming up with price. The positioning on the options chain is mostly staying the same. Net delta fell negative with the expiration, which is what we wanted to see, and Gamma fell off a fairly significant amount, like from 5 to 3 million. That's per dollar exposure. If we go out here, it looks like a little bit of the 22 and 20 interest rolled forward, but these calls to the upside are largely sold, and these are that's true at 25. Hold on. That's true at 25. These are pretty far dated. Again at 27, we're looking at like April calls. Out at 30, we're seeing some getting sold. A lot of these are Jan. But to the downside, everything's very short dated. It does look like they rolled forward the 22 to this Friday. And the 20s still a little bit supportive into the OPEX, but upside delta is very thin. There's only like 25, 27. I think these are being pretty heavily sold. We got another downtick in IV30 on Friday. And IV10's starting. I mean, it's choppy, but it's coming down slowly. And so the vol shorts are trying to move in on the upside of this. Now, they're definitely still in a position where they could get squeezed. So it's not a very safe short. But if it were to fall under 20, it could fall like all the way back to gamma max. So it would be, like a very, very big move, like almost a 50% drop, which is kind of why I'm interested in it. Uh, with the sold calls coming in, it does give it a little bit more upside room. But yeah, you see how hard gamma falls off from like 24 to 2350. And then below 2350, it just falls off really, really fast. And so this is what I'm looking for to pick up puts is like this first part of the breakdown confirm and then at like $20 I would probably add like a loss of 20. I would add to the position. So maybe near the money puts here and then out of the money puts here. They're very expensive, so be careful. It might be better to do like put spreads. Son of a bitch. So neutral. Vol shorts. Moving in at 25, 30. Losses of 2350 and 20 are bear signals. I might do some spreads to offset the cost of the puts, but I want to start getting some puts. And just so you guys know, I'm looking like 30 to 60 DTE on those because of how much of a struggle the short vol positions having like getting into place. So play like this, I mean, from a risk management standpoint, this is generally something where you don't want to deploy a lot of capital because the upside risk is really high. Now the downside profit potential is obviously very attractive, but something like this, I wouldn't put like a ton of money into shorting sound because the volatility makes it really dangerous. And I feel like these are the exact kind of plays where people have a tendency to over leverage because of that reward potential. But that's backwards. Like that specific way of thinking is not how, like, you want to reverse that. You want to lever up safe shit. And you want low leverage on risky plays. Yeah, bear calls. Bear calls were great last week. They're probably decent again. It's very near the top of the options interest. I do the opposite. I know. That's the problem. I mean, it's a problem shared by you and most retail investors, and that's because this is super, like, high leverage here is super greedy, right? High leverage here is boring, and no one wants that. Everyone wants to make as much money as quickly as possible. Yeah. But that's the exact opposite way of how you should manage that risk. Because, if you throw $300 on sound and you get, a $3,000 return, that's amazing. But if you throw $300 on, like, long the 20-year, your returns are going to suck, right? And so, you want to inverse, where you apply your leverage. You don't want to put 3,000 here and just lose 3,000. You'd want to put like 300 here and 3,000 here. I don't. That's why I buy KO and Drip. Gross. KO has a terrible dividend. I know everyone loves it and they're always increasing their dividend, but it's really just shit. It's a shit dividend. It's like under the rate of inflation. What's it at right now? 3.11%. So it's below core. I think even like SCHD has a better return than that. Yeah, it's 3.62. Jeppy, you start running into like year-over-year performance issues. It's like a 7.2%. So it's 7.2% dividend, right? But the fund is down 7.72% over 3 years. I hate SCHD, but I mean, even it still has a better yield than KO, and at least it's dynamic and constantly gets rebalanced towards improved dividends. Oh, FF's Chill Guy coin exists. How can I short it with all my money? All right. Anyway, moving on. That's where I'm at sound. Fubo. Fubo's been getting pretty aggressively shorted for, like the last couple of weeks. Liquidity might be starting to get a little bit thin. It does have a higher low over that period, which is probably a good thing. If liquidity gets kind of seized up at a higher, like, I mean, if you look at like the big shorting periods, we keep ending up like a little bit higher, which is a net positive. But again, I mean, with Fubo, I'd be focused around earnings when Ivy starts to turn up and shake off those 150 sold calls. I just use SCHG to stuff cash in when I have too much on hand. I don't know what to do with it. Yeah, that's fair. So, I mean, this looks kind of boring. I'm not going to really dig into the options chain on Fubo because it's not worthwhile. There's like 3 strikes that matter. If it gets over $2, it can just keep moving up. But Gamma's pretty flat to the upside, I think. Yeah. Well, I mean, if you factor in like moneyness when looking at it, like these will increase as the price moves up. So you know what? Just hold on. Just look at delta. That's easier. So there's a decent amount of out of the money delta on it, like out to like $5-6. We seems like there's plenty of sold puts at a buck 50. But yeah, that $2 mark's where things would get a little more frisky. Until then, just boring. I mean, like Vol's and like, kind of in the toilet for Fubo right now. It tends to get shorted down anytime it breaks out meaningfully anyway. Yeah, like IV10's way down. IV 60, 90 starting to poke up a little bit. That could be encouraging. That means at least that there's some far dated out of the money call demand. That could maybe be entirely the pickle jar, but I do like that that's kind of coming up. I mean, it's sustained periods where IV 60, 90 have climbed on Fubo. You tend to get a very good amount of price improvement. So that aspect of it is encouraging. I think if they move a little bit more positive on the next earnings, I'm gonna want to see revenues come up, but if we get a little bit of improvement in revenues and margins can push closer to positive, I think that would be pretty good for them. Probably still a couple of quarters off though. Let's see what's next. So Fubo, kind of boring. IV 60, 90, improving. Bullish above 2. All right, let's take a look at NVIDIA. All right. So we got a little bit of a downtrend that's formed on NVIDIA over the last couple of weeks. This has been marked by large resistance at the 40 level, where there are a fairly significant amount of sold calls. This most recent rejection could still be a end of bullish consolidation. I would definitely want to see this lose the 34 level before it confirms a breakdown, right? Like this breakout into a slight rejection and then finding support so early could end up just being bullish. And I would watch out for that. Current conditions don't really support a ton more leverage coming into this, but it could happen if inflation were to fall a little and loosen up financial conditions. So we got a couple weeks for that. I would say for now, I probably wouldn't want to go short unless it went under like 134 from the technical side. We'll go look at the options. So over here, can I move this a little? I want to move this a little so my fucking head's not in the way. That's not better. You know what? I'll just get rid of my head. There we go. No. shrink my head. You guys can see the end of the volatility there, I guess. I'll have to think about that. Looks like Ivy 30 is still quite low. Came down pretty hard on the rejection. Hit like 43. By the end of the week, down to like or 52 at the peak. At the end of the week, down to like 42. You can see if anything longer dated's maybe coming in. Yeah, a little bit. Maybe 10. Kind of looks like shit. It's starting to fall into, yeah, see, like under 34, right around here, it starts to fall into a range where gamma falls off pretty rapidly to the downside. And that's going to be about $10 higher than gamma neutral. Dealer net delta exposure is still continuing to slump. So not a lot of delta supporting this. Gamma, however, is still positive, so there's still some near dated positioning that's kind of helping it chop around between like 34th and 40. Let's take a look out into the OPEX. So yeah, a little support here at 35 into the OPEX expiration. Same at 30. But delta to the upside is pretty slim. Most of it's right around 140. There's a lot more in the money delta. The decay of which, yeah, the decay on these is probably supportive. So I wouldn't get super bearish on this until maybe after OPEX. When some of this supportive delta falls off, I might revisit it. But right now, I would say range bound. Between 135, 140. With those levels marking breakouts. And the strength of an upside breakout is weaker. If you take your head away again, I'm leaving. Is this the naughty or nice list? This is just what I've been doing lately. Because it's a little bit more efficient and we get to cover some shit that people actually want to look at versus me just reviewing the Mag 7. FSLR. So this is high short interest for very good reason. This is getting pretty close to the level at which I last shorted FSLR really hard. Hmm. Ooh. Yeah, this doesn't look pretty to the downside. That's quite a lot of negative gamma. Like out to like 165. Not a lot of in the money delta to squeeze to the upside. I would say that the options market is leaning really heavily towards this going down to like 165 or maybe like 135 in the long run. These are Jan, so those probably there's not a lot of expectation, but these puts are like June 20, 2026. These like at 200 might be sold. Yeah, I think like a loss of 80 is gonna push this down to like 160, 165 pretty quickly. the upside move doesn't look as good. These are just Jan. Yeah, all of these are Jan OPEX. So maybe there's a shot for it to bounce back to 200 before Jan OPEX, and then it'll bleed off after because the put side's a bit longer dated. And that might be like kind of like what's Trump gonna do, tariffs kind of thing. I mean, this is definitely a stock that's gonna be extremely affected by any like political decisions surrounding energy and energy policy for the new administration. We can make some presumptions around that, but I wouldn't. Trump's a wild card. Yeah, I can throw Upstart at the bottom. So, bullish between is like 180. Is that 8250? That's just 80. 180, 200. Moderately bullish. It's not that bullish. One eighty, 200. All right. AMD, because for some reason you guys think this is going to go back up again. Am I going to get asked about this every fucking week? And like, you guys keep asking about AMD every week and it just keeps going down. It seems like all of you guys that wanted to buy calls on it should have just listened to me when it lost 160 and bought puts. When I said it looked bearish 3 weeks ago. But I have a feeling that some of you may have gone long AMD. And that's concerning. Which one of you is asking about AMD every week? I don't know. Was it you? I think it was just you. Ew. I can just move this fucker. Is that even grounded in reality? Where the fuck did that come from? That's not the right spot at all. Hmm. Okay, that'll suffice because I don't want to draw the lines. I don't know where this came from. I will say it looks like it's broken down below its long-term trend. Downside targets from here would be around 100, then around the 80s, and then the 60s, which is probably closer to a reasonable valuation for AMD right now. I mean, it's definitely going to still carry a multiple, but the lack of interest in their AI tech is not a headwind for them right now. Tailwind. Fucking boats. But we'll take a look at the options chain too and see if any support's starting to build up anywhere. I don't think it is. At least nothing significant. Looks like the 125 level had some interest, but 130 was better. 130 is now lost. So 120, 115, 110 to the downside. If it gets back above 125, maybe back out to 130, but it's not there right now. And that could be like an aggressive move across this band, like right here. So if it breaks up above 125, bullish, but otherwise, this looks like it's going to continue to bleed out. Yeah, I don't like how this looks at all. Hmm. Look at the OPEX. Look at the gamma here. Yeah, so maybe if the market turns around before OPEX, a test of 130, interest above 130 kind of dies off. But any failure, continued failure to the downside is bearish. So it's bearish sub 125, bullish above 125 to 130 short term. Fuck. Zom. Also getting pretty cheap. I think this could fall more, especially if we continue to see dollar rise and inflation expectations stay fairly grounded. There hasn't been a lot of geopolitical stress lately, so we haven't gotten a rebound in oil yet. Um, although I do expect we'll see some supply issues end of the year into the first quarter of next year, because the OPEC cuts have gone on for quite some time, and the U.S. is still not entirely self-reliant. Um, Sub 100 had been a very good buy-in range for me before when we saw the lows in oil. If we're approaching a recession, though, this could go much, much lower. Um, I would be careful getting exposure to ZOM at these levels currently. Um, at least long exposure. Does seem to be kind of right in the middle of the positioning on the chain. The upside exposure is actually not bad. It does look like puts are being sold at the 105, 100 level. Um, maybe some at 110 and 115 as well. One of these, are those coming in? So, yeah, some volume on 110, 115. Upside. There's not much delta to the downside, so I would say maybe 105 is a local bottom. But I don't see anything that's going to turn this around anytime soon. What if I might be a local bottom? We got just a bit below GNDN. So yeah, break back above 107, 108 would be bullish. It looks like that's out to 110, 115. The options channel looks mostly pretty boring on it, though. Low interest. Right now. Alright, BTU. BTU should have gotten hammered recently. Carvana, BTU. BTU fell below its long-term trend. This is getting pretty close to my like sub 1864 buy-in range. This is the last place that I bought BTU. There's gonna be some issues with exports to China until we start to see more stimulus come out of there. Obviously, it had a really nice rally on all the promises of Chinese stimulus, and then those fell flat because it's like directly proportional with the profitability of their Australian mines. Um, but cash flows are still strong. The dividends, improved a little bit over time. Um, I don't really think there's any problem here. And margins were carrying around 10% in the last quarter. Those might trim back a little bit more, but I still think that like 17 to 1850 is stable and an attractive buy-in range. So have you been assigned on BTU at some point, selling covered calls, and you got out at a higher price? This might be an opportunity to get back in. I mean, I don't think anything fundamental with the company has changed drastically. And I still think that their cash flows offer the potential for a much higher valuation. So still a pretty big fan. I know they're trying to move a little bit more into metallurgical coal, and if they're successful in doing that, they'll uh, at least expand their revenue potentials a bit. Where in the pickle jar do I access Pickles Picks? Literally in Pickles Picks. There's if you scroll all the way down in the channels, you'll see the Billionaires Country Club, and the first thread in that is Pickles Picks, and then within that are threads for each week. Or the first channel, and then within that are threads for each week. So maybe I might actually start selling some puts on BTU again. I did get rid of some of my holdings, so this might be an opportunity to average, well, not down, but uh, leverage back in. I am kind of getting interested in China, but very slowly, like 6 months to a year, not in the near term. Um, Over here, we can take a look at the options chain. Hold on, let me just get that off the screen. So falling a bit below DN, and then gamma falling with that. We see some near-term gamma picking up, so it might be nearing a bit of a bounce. Although I don't see a lot of out-of-the-money interest that would support that. It looks like most like some sold puts right in this range, 22 to 18, which makes sense. Most of the calls on the chain here are at 20. Longer dated, I don't really see anything super attractive to the upside right now. So probably not a lot of upside potential on this. At least not unless it gets way further out. And this all looks like it's falling off. Yeah. This is all just sold shit falling off in Jan. So maybe after the Jan OPEX, we'll see some repositioning on the options chain, but right now it's very slim. So I wouldn't say, yeah, vol and realized vol are both rock bottom. There's really nothing exciting here until like above 23, and then all of this is gonna fall off with the 117 expiration. So I would say it kind of looks really attractive down here, moderately attractive here. I wouldn't buy it higher than those prices at all. Um, but probably a period of consolidation here at the lows until something shifts geopolitically, or we get a push into commodities on a sell-off in tech, but that's extreme. So if you go to the general chat thread in the public Discord, there's a thread there called "How do I link my accounts?" and it'll give you instructions for how to link your YouTube to your Discord and unlock the channels. All right. So yeah, for BTU, I'm gonna say nearing a nice buy-in range between 17 and 20 for long-term holds. DVN again. All right, let's take a look at DVN. DVN. So we did finally find a little bit of support down here at 30. It looks like some volume came in, and we got a little bit of a reversal. There's an upside gap around 32. I'd still be more interested in buying in around 24. NatGas is starting to climb up, and it's starting to move a little bit above trend. If the winter gets significantly colder, we might start to see some better forward pricing on nat gas futures. Obviously, that could be a big help for DVN. But I mean, as far as earnings go, they're still very stable. Obviously, this benefits greatly from yields falling, as does like AQN. Um, so I mean, yields up right now is really not good for their balance sheet. They've got 15 billion in liabilities right now. Liabilities picked up pretty significantly in quarter three. Now, yeah, that's gonna probably go a bit into growth, but some of that increase in liabilities is due to the change in rates. Total debt's about 9.27 billion, but uh had their cash flows stayed in line, and they hadn't had such a big drawdown in quarter three, I think price would have remained stable instead of it selling off so hard. Um, but revenues have been basically flat over the last couple of years, and I mean the market's going to want to see those turn around. They're going to see the margins pick up a little bit, and these companies aren't very quick to do that, so it could be some time that it bottoms out. And we'll go look at what the options market's pricing in, but it's probably not going to give us any other conclusions. Um, so there's some puts getting sold uh, further out. I mean, Jan 2026, like 3250. There's definitely some interest in like Jan 35. It doesn't appear there's much interest on the chain below 30, or at least not much expectation it's going to fall below those levels. Looks like most of the sold calls fall off Yeah, around Jan. So very similar to BTU here. Like, a lot of this upside gamma is gonna expire with the end of year. Um, and it's the price is probably going to consolidate around the current levels. It is relatively cheap, I think, but I would want to see like next quarter's earnings and see if they get those cash flows turned around. If you DM me nuts, and I can help you out with that after the stream. All right. Do I even have RCAT options data? I don't. So there's not much I can offer you on this yet again. They're a fake company. They don't do anything real. They provide products and solutions to the drone industry, which I don't think they even do that. They have net margins of negative 868%. So yeah, this is just bullish speculation and probably a bit of a short squeeze. Uh, doesn't look like volume's picking up with the newer high. They don't make money. I don't know what's attractive about this besides it just getting short squeezed. They've got like $1 million revenues and a $982 million market cap. EBITDA margins 569 negative 569%. Gross margins are negative 1.53. Debt to equity ratio is 0.51, which isn't great. So yeah, I mean, it's just overvalued, highly volatile sack of shit. If you bought it at, a fucking 60 cents, congratulations, but I doubt you did. F3250cc is expiring this Friday. Looks like you might be in a good position to sell them again if the support here continues to hold, JC. The only thing I'd be worried about is like a break of 3250 back towards like that 35 level, but I'm not super worried about it. I don't think yields are going down anytime soon. I mean, the 10-year is breaching like 4.62%, so utilities and stuff are just going to get cheaper. Will you check out GRNT? Maybe. Yeah, I'll just do it real quick. And I'm like guarantee I don't have fucking options data on this. Oil and gas production. Why? What's even remotely attractive about this? And when have oil exploration companies ever been interesting? I like the chart. The chart's terrible. What do you want to short it? They probably just diluted a fuck ton of shares back here. Seems range bound, tradable. Seems like garbage. You know what this reminds me of? What was that fucking company that we used to, like the oil company that we used to trade all the time? God damn it. Rig. It reminds me of Rig. At least Rig had like actual potential though. Rig still does the same bullshit too. It just spikes. Like you can trade CL if you want to trade spikes in oil prices. You get way better liquidity. I mean, that's what they're fluctuating on, right? Like oil price spikes, then near the money shorts get squeezed out, and then they all pile back in the second oil prices stabilize. Full port beyond calls. You're an asshole. All right, so RCAT, I don't care. Tesla's interesting. So Tesla nearing the 420 level, where there is prior support, 420, 415. That support came in on the move up. We're just gonna want to look at the options chain on this bad boy. Um, hmm. Hey, Nuke, if you're watching, I found a gamma chart that's kind of fucked up. Looks like total delta and adjusted delta exposure are both falling pretty quickly here. It may be that some of the supportive positioning at 420 and 400, yeah. So it looks like some of the supportive positioning has fallen off. At least down to 400, where there's actual major support. Um, Not too much delta to the upside unless it gets back above 450. I would say that this could probably continue to fall off until 400, but I'm not sure that I'd want to actually short that. Realized vol is starting to come down, and so it's now below IV on the 30-day. We'll probably see more volatility shorts start to pile in, but I think they're just scared, which is kind of fucking reasonable, given the none of the fundamental information on Tesla has changed at all. Yet the market cap has 3x'd in a little over a month. So depending on the flightiness of short vol in coming in, this could see a lot of downside or very little. But prices near spot are volatile. Gamma's almost completely flat between 450 and 420, which means that price can just bounce around in this range. I probably wouldn't want to take just a short here. Like, I wouldn't want to pick a direction, because literally any day this could move 3 to 4% in either direction. Um, Under 420, maybe a little bearish. to 400. All right. Let's take a look at hymns. Hims has tacked on a ton of valuation recently. It does look like it's starting to break down. Um, a large part of this was their move into GLP-1 inhibitors, like Ozempic and stuff, and getting online prescriptions for people for those. Obviously, that's really bullish for them, but at the same time, new FDA approvals for usage. I know Zepbound and Manjaro, I think, both just got approved for obstructive sleep apnea in addition to type 2 diabetes. And as insurance covers a broader range of uses for those medications, the drive to get those medications and pay cash for them online is going to slightly decline. Yeah, diabetes. So that is not great for them. And I think a little bit of that's getting priced in over the last couple of weeks. I think it was just like a week and a half ago that the FDA announced um, like some new things that the GLP-1 inhibitors can be prescribed for. However, we will take a look at the options chain because that's what drove a significant part of the move on Hims. This was something Nuke was playing off of the meatball for several weeks, pretty successfully, and I would say that there is still some near term support around 25. Um, this is starting to fall in a range where price is going to be a little bit more volatile. Might benefit from straddles more than anything else. There's still some interest to the upside around 2750. And a loss of 25 would actually be bearish. Given the technical trend, I would aim for this. I would say things are starting to shift a little bearish here. I would like to see realized vol and vol come down a little bit more, and they haven't. So it's not something I'd want to just straight short again. Some sort of upside hedge with a play to the downside, or simply wait for it to confirm, a loss at like gamma neutral, which would be about 2474, delta neutral at 21. I would say, but yeah, I would say a loss of GN's probably pretty bearish. Bearish. Needs to be confirmed at GN. Not ideal for directional plays. Well, for unhedged directional plays. All right. Roadblocks. Mm, this looks pretty good. Net margins still suck. Let's see. There's still a little upside gap to the prior level at like 73. Failure here is a little weird. So that's roughly around IPO pricing. So there might be some people dumping bags. Um, Lots of in the money call delta, basically nothing out of the money. Um, it's a little bit of interest out to like 65, and some gamma supporting that. So some shorter dated interest still to the upside. Although I feel like that's maybe falling off. Yeah. Let's see how Vol looks. Vol's down pretty hard. Hmm. Supports at 55 and 57.50 with range out to about 65. Okay, so it's still slightly bullish, but risky because I feel like any moves to the upside are going to run into a lot of short vol. But I don't think I'd play this. I don't like the options chain very much. Um, Apple. I think what we're seeing on Apple is more flight to safety than anything else. I think people just don't know what to put their money in. Um, Rejected at 60 last week, fell back to 65. Yeah, let's take the options chain here is getting a little bit more wild. So looks like still moderately decent support for the 117 expiry at 250. These are largely sold calls, which makes the upside moves kind of erratic, but most of the delta on the chain is in the money. On the vol side, still a little bit elevated. I'd want to see more short vol come in before actually shorting it, and or a loss of the 250 level. But this is another rejection off of Gamma Max. Delta's still positive. Gamma's still positive. Probably an okay opportunity to sell 260 or maybe 250, 750, 260 spreads. I wouldn't short this yet though, not unless it lost 250. So that one's pretty simple. Just stable 250 to 260. Bear call opportunity. Above GM. Bearish below 250. How bearish? I'm not sure. That's a good question that nobody asked, but I did. Yeah, a loss of 250 you can see a pretty quick dump. Um, gamma drops off really hard to the downside of like the 250 or the 250 level. Um, kind of down to like 225, 220. So there could be a really big downside move on Apple if it were to lose 250. But 250 looks supportive into OPEX, so I would say not anytime soon, but keep an eye on it. And then lastly, Upstart. Oh, that's fun. I don't mind looking at that one. Let's go take a look at that. So Upstart getting a little less liquid, generally a sign of shorting. Obviously, the rate environment is not bullish for them. And we've seen the stock kind of top out since rates have continued to rise despite Fed cuts. Even with their last better than expected earnings, price improvement has fallen over the rest of the quarter. Um, I think as volatility continues to trim down on this, it could open broader ranges to the downside. Um, my next like downside target under like so I'd say like 56 and 46 are pretty interesting levels. We'll go take a look at this on the option side. Unfortunately, there's not a lot of gamma to lose to the downside here, and it would need more. It would need more interest to really fall off. So it's got to lose like the 60 level, and then gamma kind of flattens out. It did close a little bit below GN. DN's down at the 50 mark. Um, VN at 56. So this is still very, very strongly supported by sold puts. I would say that's what we're looking at here at 70, 65, 60. These look like they're all for, well, those are Jan OPEX. Okay, so most of these are Jan OPEX, these puts that are supporting this. And the money delta here is also largely Jan OPEX, and that decay is going to continue to be supportive of the spot price. So I would say not very bearish for a couple weeks, and then things might get a little uglier on it, and there might have an opportunity to move down more as the gamma to the downside turns more positive or flattens out. So we'll look at it in a couple weeks. In the meantime, not very interested in it. All right. Here, let me. You guys can, if you want. I'll leave it up for a second. And that's enough. All right. No problem. Do I have a question here? And then I can join the boys. Where are they? That's just Dork? Where the fuck is JFresh? That's very aggressive. How you doing?
Good. Where the fuck is Jake Rush?
I don't know. I gotta turn you up though. Say something. Say penis.
Penis. Big
Mm,
penis.
excellent.
Turgid penis. Throbbing
Perfect.
penis. Curved penis. Okay. We good?
Yeah, I think so.
Nice.
If you have time
How you
for
doing?
I'm doing alright. A little tired, but this energy drink's kicking ass.
Your ghost energy drink. Just ghosting.
It's just energy powder now. I've moved on.
Are you just straight snorting that shit, or are you
It's like,
mainlining it?
well, no, it's like a pre-workout for people who don't work out.
Oh, good lord.
It's like nootropics and shitloads of caffeine, but no like NO2 or creatine.
Oh, good god.
So we'll see what happens. I've never taken nootropics before. So it's either gonna make me dumber or the same.
You know what a good nootropic is?
Mm.
Mushrooms.
Well, that's debatable.
You know what, dude? You just got to take a bunch of mushrooms and watch some Paul Stamets, and you will see the light.
You're getting juiced. Yeah, it's a gaming stimmy. Yeah, that's exactly what it is. We'll see how well it works. I'm excited about it.
You know, I'm doing pretty good today.
Yeah, I
You know
didn't
why?
ask, but go on.
Yeah, I know you don't care, but I'm going to explain it anyway. I am doing pretty good today because TLT closed on Friday at 87.10.
Not 90.
Not 90, not
Yeah.
89.
Do you
Nope.
think you're gonna convince Poopy to move his 401k?
The thing is he's insanely bullish on TLT, but then he tells me he only had like $150 of exposure, and I'm not sure which one is the truth.
It's $150 of really far out of the money exposure.
But
To-
Poopy, you say you're not insanely bullish on TLT, but you're expecting from here like a 20% move up. That's insanely bullish on bonds.
Yeah, the 10-year would have to fall back to like 4.2.
Yeah.
Poopy, I don't know how many times I have to tell you this. The 20-year is going to 7 to 8%. Get on the bus.
I mean, right now it looks like it is, that's for sure.
You're a monster, but it's real. I'm on the bus. I don't know what else to say about it. Like, what are they gonna do? Tell me how they bring rates down now. Now that they've just absolutely fucked everything. Okay, I just realized there's like a bunch more powder in the bottom of my beverage, so I'm not even getting the full.
Oh, Jesus Christ. Girk, I got such a fun chart. This is the best chart. Give me one sec here. I gotta get the one last little bit of it here.
Ooh.
Oh, yeah, look at this thing, dude.
Ah.
Hold on. This is Wait, are you gumming the rest of the cocaine in the
Yeah.
thing?
Yeah, I am.
You fucking freak. All right, I posted a chart.
All right, what is it?
What do you think it is?
Is it the Fed's fucked chart?
Yes.
Oh, nice.
Yeah, look at this thing. It's so gorgeous what is happening.
I want you to know that we show this chart to people like every other week, and nobody knows what it means.
Dude, it's a fucking yield, dude. I feel like this is like standard. Like you should know what a yield curve is.
I agree, and had they read any of the required reading, they would be able to identify what this chart means. But I'm pretty
Well, just
sure
like-
they can't. So there, you have 3 lines. Okay, I'm gonna try to explain this to a 3-year-old. You have 3 lines, and each of those lines represents the yield curve at a different date. And then across the bottom, you have the durations. And on the left, you have the rate. So you can see that the top end of the yield curve between 12.27 and 11.1 has risen rapidly. And the bottom end of the yield curve has dropped. So, hold on, I've got a pen. I can do even more. So this part has gone down, and this part has gone way up. Give me 1 second. Someone's at my door.
I can elaborate on this. So what Girk is kind of getting at here is that the yield on short-term treasuries has gone lower, while the yield on long-term treasuries has gone higher. And so what you see is a sort of pivoting, right? If JFresh was here, he would, he has his explanation, which I don't think is wrong. But because the short end is going down, because the overnight rate is dropping, thanks to the Fed cutting that rate, people are seeking those yields elsewhere and doing so actively, which is what you would not see if there was a strong degree of confidence that over the medium to long term, inflation were going down. If you did not anticipate that, then this is what you would expect, especially with the amount of growth we have seen in the economy and in the top 10 stocks, because that's all anybody cares about. So this is a bear steepener.
Yep.
Because the long end has risen faster than the short end has dropped.
Yes, and if you're a fund and you're buying stocks, equities, for the long term, which is the majority of funds, they're 10-year, 5-year, 10-year horizons, very rapidly, bonds are becoming a better investment. So fear and a flight to safety, a little bit. We don't actually have a flight to safety, otherwise the yield curve would be going the other way. What we have is a demand for higher yields.
And you see how the very, very short end, you see how RRP in the 1 month, there's that rise in yields between the two, betwixt them, right? That if this was a flight to safety, that little bump up from RRP to 1 month would be a bump down. It would be facing down. Because that would mean that short-term growth prospects are low. And that means that bond, people who buy bonds or equities, right? When they're determining whether to buy bonds or equities, they would be thinking they can get a better yield over that time from the bond than they can get from the equity appreciation that they can capture.
Mm-hmm.
So it's interesting. And really, this is the thing is, though, this could be a good sign, right? And let me explain why. Because this means that traditional lending is starting to make sense again, where you borrow short and lend long. So you can get more favorable terms on the short end than you can on the long end, which is exactly what banks do when they lend, because they have the liquidity to be able to pay off those borrowings that they get to finance your house or whatever it is, and then profit off the spread.
No, they don't.
I'm talking about traditionally, Gert, not like right now, not this very second.
I know.
So yeah, in a traditional sense, in a grossly oversimplified sense, that's how it works. And plus, they profit off the spread plus a little premium because you're not the federal government. You know, you're a human who may default on their mortgage or whatever. So there's a little bit extra premium in there. And that kind of covers between everybody who gets a home loan, that kind of covers the risk of, a few of us not exactly being able to hold up our end of the bargain. So this is kind of a good thing in that sense, because this means that very slowly our financial institutions who are incredibly underwater on a bunch of hold to maturity shit should be able to sort of eke out the profits they need to dig their way out of that hole. Well, I guess you'd have to climb your way out of that hole. But this marks the start of that. The problem is, though, is that because it is a bear steepener, that means that the conditions in which you're trying to get a loan are more expensive than they would be if we had a bull steepener where the short end just dumps, right? And what's interesting, though, is that once again, because there is no fear, right, we aren't really seeing much more additional tightening to credit conditions. If you had a bull steepener, you'd get a lot of tightening in credit conditions, because with a slump in economic growth comes an increase in risk, which is not being seen right now by the bond market. So it's an interesting place. And I think what this all means for us is that home sales are probably going to remain low and nothing else really much is going to change unless something big happens, like unemployment starts moving up, like in a trend, something like that. Then you're going to start seeing the short end collapse because short-term risk is increasing, and you will see credit conditions tighten. The long end, depending on the severity of what's happening in the economy in this scenario, will probably drop, but I don't think it'll drop by much, because when you game it out, what that really means is if it's really severe, you'll get QE 3.0, right? If it's not that severe, you won't. And so in that case, yields are going to stay pretty much where they're at in the long end. That's kind of my thoughts on this bear steepener and kind of its implications in the broader credit market.
So long short-term bonds, short long-term bonds. I mean, that's kind of the trade everyone's already in. Or well, they're short. They're actually right now, because of the cost to carry for the leverage. It gets a little bit more complex than that, but the cost to carry is forcing them to short the short end, despite the short end rising, in order to maintain the leverage necessary to hold on to the long end. So they're actually short both. Well, underlying long both, but so how do I explain this simply?
You can't.
Yeah, you can't. So they are inherently long. The long end is their leverage, and so they're already very long the long end, but they're long the long end at yields that are significantly lower than the current yields, which means that they have to short the long end in order to maintain the balance between their core holdings and the current market rate. But because the long end is moving up so rapidly, they also have to short the short end in order to get enough margin to hold together the cost to carry the long end.
Yeah, it's kind of like if you bought GME at the top on margin.
Yeah. Like you bought GME at 420 in 2021
with a HELOC.
With a HELOC.
Yeah, maybe better terms than a HELOC, but you get the gist. You still have those payments to make, right? And in this case, it's not necessarily payments as much as it is opportunity cost, right? The the cost to carry that Girk is alluding to is more so the fact that they're getting just piddly shitty yields on it, and if they try to dump them, they're worthless.
Yeah. Yeah, the mark to market is a loss on their net liquidity.
Yeah, so their only hope is to hold to maturity, right? But that yield to maturity is nothing compared to if they had bought now. And it's not like it was necessarily the bank's choice with what they had to do. They had to park all the money they got from the government somewhere, and this was the place to put it that required zero thought.
Well, it's the safest place to put it. If you're
That's what I
parking,
mean, yeah.
if you're parking cash, you don't have a lot of options.
Especially as a bank, like you can't just go and you do buy equities,
Well,
but you have to.
don't forget they're also prime dealers, so they have to buy. They have to buy the debt.
Yeah.
So this is a
Stupid
position
swaps do
that
exist.
we forced them into.
You know what swaps they're doing though, Poopy? Like, okay, so if you think about a swap, what kind of swap would you do to hedge having to buy crap loads of long dated treasuries at an insanely low yield?
Ball swap.
Vol swaps, and then you would probably do interest rate swaps with other countries.
Yeah.
And then what else you would do to lever up is you would do collateral swaps with your junk bonds that you got. And then now you got more treasuries, but they're not really treasuries. They're just junk bonds with a treasury label slapped on the top. And
Are there new regulations on required holdings for large banks? Yes, which they currently don't meet.
Basel 3? Yeah, yeah. No, nobody wants that in the banking industry.
Yeah, their U.S. banks are fighting back against it very hard. The Fed hasn't issued any guidance on reserve policies. And yes, our banks should move over to Basel III. It's far safer. But it's almost a return to like the Dodd-Frank era. And they don't want that. Especially now, they can't. They cannot put themselves in a position where they can meet the requirements of Basel III currently. And so basically we've just put it off for a couple of years without ever meeting those reserve requirements. And now reserves are draining, so we're moving further away from the goal.
Yeah, it's an interesting situation. That's for sure. I haven't looked. What's the balance in on RRP at nowadays?
Hmm. It hit 268 billion on Friday.
Okay.
Up from $98 billion in the prior Friday.
Okay.
So banks are window dressing hard, trying to pretend like they've maintained liquidity with RRP conversion, and they haven't. But this was like fairly standard end of year shit.
Yeah, I mean it makes sense because everyone's tax loss harvesting and doing their end of year profit realization shit. You know, everyone's getting ready. They need to have the Excel charts looking really good.
Went for like 40 participants to 60 really fast. Yeah, well, as the bear steepener gets worse, risk on the short end increases, and those that are short paper will need more and more treasury exposure especially moving into a reporting period. Um, they'll need that reverse repo exposure in order to show that their books are well that they're simply meeting the requirements of the money markets. What's the fucking? I always forget the code for them.
I don't know. You're asking me regulatory stuff, and it's been a while since GME, so I'm not exactly up to snuff. Back during the GME days, I'd read tons of these papers.
It was the 2A7 requirements. So they're trying to increase exposure to RRP. Well, they're increasing RRP balances in an attempt to improve liquidity conditions and be able to meet redemptions or redemption demands. But again, part of that's end of quarter, end of year, because you have the 1 year rolling off. You have, 1 month rolling off, end of quarter rolling off. So you got your like 3 month bills. And money markets need to prep themselves for that rollover. So some of this move in RRP isn't as scary as it looks. Now, if we get past the end of year and RRP tanks back to like 80 billion, that could be a little scary. What?
Does this mean calls or puts?
The ultimate question.
I mean, yeah, isn't that what we're here for?
Are we trying to wrap this shit up early?
I don't know. I mean, JFresh isn't here, so I can't get him on a tangent about AI.
That's true. Which is, fine.
Wait, who won the predictions?
I don't know.
I was close, and then fucking Friday fucked me over, I'm pretty sure.
Yeah. I bet way too low. JFresh, I think, wins. Well, actually, I have to measure
Actually,
it.
I might win on a technicality here.
67, 80, 91. Yeah, you do.
Hey, sweet.
Do we want to take a look at options stuff first?
I mean, I probably should if I want to be responsible.
Ooh, I could show off our new feature. Oh, no, I can't. Tease.
Yeah, you're not allowed to yet. Ooh. Well, this just makes it harder for me to make a prediction, though.
Why?
Because now I have to use my brain.
Oh, sorry.
Looks like... Okay. Okay. You know what?
Mm-hmm.
Yeah. I kind of want to say down.
I do too, but I want to start with up.
Yeah, you're probably right. But I'm just going to say down.
Fair enough.
I'm going to be ham-fisted in my prediction.
I think we got a decent amount of support at 59.50 on Friday.
Well, yeah, you could tell there was a bunch of vol shorting.
Yeah.
At the end of the day, so like, I mean, I don't disagree that we'll probably bounce to start the next week. We have a half day though, and a no day next week.
We do, don't we?
Yeah. So the perfect time to short the fuck out of all heading into
Yeah.
the new year.
Yeah. I think the next 2 days probably pretty bullish.
Yeah. Well, because we said that, I'm definitely saying down for the first 2 days.
All right. Hold on, I'll get yours ready.
Yeah. Prepare yourself.
All right. How far down?
That's a good question. 5,900 by which day is the missing day? 5,900 by end of day Tuesday,
Okay.
and then 5,600 close of Friday.
What is end of day Tuesday? 1
I
o'clock?
don't know. I think it's like 12:30 or something to 1:30.
Let's go 1:30. And then 5,600 end of week.
Yep. Which means it would just be Thursday, Friday, and then 50 or not. Sorry, not. I meant. You know what? Actually, I'll keep that. I meant up, but let's just do it. Why not?
It's like you've forgotten the rules. All right, fine. It's ridiculous.
Oh wait, JFresh's prediction isn't JFresh's prediction doesn't go far enough for the week. Do we just tack a flat line onto it?
Yeah. I'll just drag it. Drag it to next Monday.
He's gonna be pissed we fucked with his line.
Yeah, well, it's too bad.
True. Yeah, I meant to say 6,000, but I'm gonna stick with 5,600 because it's exciting. Gets people going.
Hmm.
I don't think Girk's gonna allow me to put Bull Dork on the chart.
Damn it. I gotta be just under 5,900 to beat JFresh. All right. That's mine. Maybe a little higher here. You know what? No. No, you know what? Yeah, that's fucking end of quarter. Let's go for 6,000 retest. Wait, yours isn't far enough out. All right, there we go.
All right, let me clip it.
Wait, hold on, let me zoom a little so you can. Wait, we need to highlight JFresh's too.
There we go. All right. Get
Do we have
that up for the pores.
data next week? Barely. I think we have like pending home sales, house prices, and some like manufacturing PMIs, which no one gives a shit about. No one cares about US manufacturing. It's not even real.
It's fucking dumping rain at my house.
It's raining here too.
Aw, it's like we share something.
It's so cute.
Mm-hmm. I'm writing about that in my journal.
Nice.
Yeah, I don't know. I mean, it is end of year, so I don't really expect a lot besides some down. But what's happening in the credit market is definitely interesting and bears paying attention to. If we continue on
Yep.
this trajectory in the long end, we're in for some interesting times.
Things are gonna get ugly. I think we've got maybe quarter four earnings, and then I think if the forward yield on S&P contracts anymore, it's gonna start to be a really attractive sell, even with rates where they currently are.
I don't disagree. I mean, it's yeah.
The spread's getting pretty extreme. Like the
Yeah.
forward yield, like forward earnings yield on the S&P is like $2 and what is it, like 281 or some shit.
Piddly. Yeah.
Yeah, where you got the 10-year at 4.6.
Yeah. It's getting weird.
Maybe
It's been weird, but
maybe
it's like
more
getting weirder.
importantly for them, the 5-year at four, like almost at 4.5.
Yeah.
I don't care what your prediction is. God, look at the people.
We start making predictions. Now everybody's a forecaster.
Yeah, no.
I mean, our predictions are barely educated, so
I mean, sometimes they're more informed than others. It really just depends on how lazy we are.
I mean, I wanted 6,000 end a week, but I said 5,600, and look where we are, and I'm sticking with it.
Why don't you just make the actual prediction that you wanted
Because
instead
this
of
is
trying
more
to be?
exciting. It
Alright.
gets the people going.
No, it gets them to buy out of the money puts like idiots.
If people are buying calls or puts based on our weekly predictions, they're fucking stupid.
I know. I remember the time when you pitched the full bull case on GoEV. It wasn't, well, I mean, that is the bull case for GoEV, is that some fund comes in, buys them out, and kicks all the executives out of the company.
Maybe you can buy GoEV, Girk.
Which probably won't happen until they're actually bankrupt. Dork's weekly pick seems like huck to a coin. Yeah. Well, you don't get it. That's like that point where it pivots down from 5,900 straight to 5,600. That's where Dork picks up his two out of the money SPY puts for end of January.
End of January? You mean end of week?
End of week. But yeah, I mean, we definitely have a breakdown on ES. I think if we look at the technicals, things don't look good. Like overall, it looks like we've got a pretty good shift towards something a little bit more bearish. I don't think we're quite there yet, and I think things might stabilize a little bit into end of year. But I think we're getting pretty close to this moving in for a bit of a correction.
Yeah, or at least some consolidation.
Yeah.
But I mean, I think the uptrend we've seen on the indexes is probably going to slow as the yield curve continues to invert. So I'm just keeping my eye. I think at this point, I mean, I'm mostly keeping my eye on the bond market. Like the S&P is just doing what it does, but
Yeah.
the bond market's where all the news is going to be.
The 20-year is almost at 5%.
I know, that's crazy. I love it.
We got the Bank of Japan decision in a couple of weeks. Once we start to get some inflation data, if that shit's hotter, things are going to get really ugly.
Oh yeah. I mean, well, and so Trump gets in office January 6th. And then he's inaugurated on the 20th or something, whatever. I bet we probably have 30 to 60 days after that to start seeing some of the economic effects from the feelings of a Trump presidency starting to come to fruition.
the collar. No, the collar tomorrow is not. It's not tomorrow. It's Tuesday, and it is the big one. That's the big collar. 60.55.
Market's gonna dump.
Correction after OPEX. That's when it's best.
Yeah, T+2.
Well,
Or no, wait, no, it's
it's
T+1 now.
That's T1
Yeah.
now. Yeah.
Still getting used to that.
It's annoying. It's annoying, especially with how much time we spent going over and over and over how settlement works.
Well, yeah, well, plus, like, if we look at, like, if we start doing historical analysis on FTDs and shit, we're gonna have to have those, like,
Yeah.
settlement conditions dynamic. Ugh,
Yep.
gross. Atomic's gonna hate having to deal with that.
Yeah, he will. Imagine having a variable.
Right, yeah. A dynamic thing? Ugh, barf. Well, yeah, I mean, didn't. No, that AI thing was 2 weeks ago. Never mind. I was trying to think if there was some actual AI news, but there isn't really.
No.
I mean, there really hasn't been for the last 6 months, but
A
don't
bit of a
let
correction,
the
as
tech wolves
in
hear that.
10% is possible. I mean, the first level that I would target for a correction would probably be delta neutral. And I'd see where we go from there. It's been a long time since we've been under the collar going into expiry. That's going to put the puts a lot closer to the money.
Damn right. We're gonna dump.
Yeah, I wonder how they it'll be interesting to see how they position it. I don't think
Yeah.
I don't think they're going to position it very bullishly.
I think the spreads on it are gonna be a little bit wider.
Yeah. Well, they have a little bit of range they can play around with.
I feel like a sports commentator, like heading into game day.
Yeah. Well, it is game day. That's the end of like one of the most ridiculous bull run years in the history of the market. And there's a whole lot of uncertainty on the horizon. Did you see the did you see the convexity, like the convexity. That's not convexity. It's the backwardation contango index on S&P
No,
for the like coming 3 months.
I have not seen that.
Risk tolerance and leverage demand just dropped to zero over like the Jan, Feb, and March contracts.
Nice.
From like all-time highs to nothing.
Yeah, I can imagine it's gonna be an interesting year.
Show
I'm
the
hoping for the
class.
best, but I'm expecting some
If I
weird.
can find it. Hmm. Hmm. Let me see if I can find it. Mm, yep, I did. Dork.
Nice. That's fine, right?
It doesn't look bullish, Garrick. Well, it's not. But it could change really quickly. Explain it? It means that, like, the funding costs for equities on the Jan, Feb, and March futures contracts over quarter one have collapsed. So demand for leverage is declining. Participants are getting out, is how I would look at it, usually. Which we've seen, right? We've seen it in breadth over the last few weeks, and no one wants to pay attention to it. But now we're starting to see tech sell off a little bit too, which is scary because it's basically supporting the entirety of the S&P. Are you coding right now?
Me?
Yes.
No.
Mm-hmm.
No.
I heard you close it. I heard you click and close it, you son of a
No.
bitch.
No. I
That's what
swear,
you get for having
no,
a good mic.
No. No. Am not.
God, you're terrible at lying. Never cheat on your girlfriend. She will catch you right away.
Oh, I know she will. She'll also murder me.
Yeah, that too.
I mean, I just all this points to the same shit, though, right?
Yeah, yeah.
So, yeah, I mean, what remains to be seen, yeah, is just kind of how much does our new president kick the hornet's nest, right?
I mean,
And there's
it's
this whole
definitely obvious people are scared of it. I'm kind of excited that a chunk of my portfolio is long commodities, though.
oh yeah, I mean, I've been bullish on commodities for a while.
I can't
It's been
wait for
unfortunate,
Trump to
but
just get in there and fuck some shit up, and not in a
oh,
good
right.
way. Not in a good way. Not like MAGA people hope he fucks shit up. I want him to just actually fundamentally screw our economy.
I mean,
Yeah, but I don't own a house. Well, I won't after next week.
I just can't wait for Trump to do something silly to make oil go up. That's gonna be the interesting one.
What about nat gas?
Yeah, that too. Yeah, energy commodities. I mean, nat gas is on a tear.
It kind of is, yeah. It's a cold
It kind
winter.
of sucks.
It was like fucking
means my
10
energy
degrees
bill's gonna
here
go up.
last week.
It hasn't been crazy cold where I'm at. We've only had like one halfway decent snow day.
Is it just me or puts very expensive for Monday? You're probably not wrong. They're not too bad. They're a little pricey given that there's no data at all. But they're not awful. You know what it is? It's realized vol is up a bit, and that's got the MMs a little panicky.
Yeah. That'll happen. Is BTC over 100,000 right now?
Oh, which means I'd be careful buying options near market open because they could get crushed really hard into the intraday. Is BTC open right now?
Is it over 100,000 right now?
No, it hasn't been over 100,000 in a while.
Nice.
Yeah, the last time it was over 100K was like around OPEX when everyone started risking off.
So when does MicroStrategy or
Collapse? I think like
Yeah.
I think it's like under BTC like 55,000. Then they have to start
Okay.
giving those convertible bondholders BTC,
I see.
which basically just debt spirals them instantaneously.
That sounds fun.
Yeah, well, you know, free leverage though, right? That's what Sailor said. Look at us making free money with zero risk. What a
Yeah.
great
The
business
whole
model. I mean, if it is, if you were Michael Saylor and you were selling a shitload of your stock back when it was, you know, $500 a share. Should I pull up insider sales at MSTR? I don't even know what they are, but I guarantee there's a bunch of them.
I mean, yeah.
Well, they haven't sold any since November
Oh, good.
when the stock was at its high.
Good for them.
But they sold a shitload. It's so weird, you know, that they believe in Bitcoin, but for some reason want to convert their Bitcoin leveraged holdings into fiat currency. Look at this.
It's weird how that works.
Graham Stephan, $9 million. Xiao Ming, $7 million. Graham Stephan, $11 million. Leslie Reekin, 12. Xiao Ming, another 5. Jeannie Montgomery, walking away with 14 mil. Andrew Kang and Xiao Ming, each picking up another million. Xiao Ming, another 500K. Li Fong, 12 million over 2 days. He's the president and CEO. Oh, here we go. Here's Sailor. Oh, look at this. 6 million, 6 million, 6 million, 5 million, 6 million, 6 million. Man, Sailor really missed the top. No wonder he's trying to pump it so hard.
Yeah, dude, he's dumped a lot. Good for him. It's the American dream. IPO, dump your shares, retire.
Yeah. Sailor was dumping
He's
pre-split.
what a Chad.
Yeah.
All right, well, I'm fucking starving. I want to eat some food.
Yeah, this is depressing to look at. All right.
It really is.
Fucking, it just like pisses me off that they con so many people into buying Bitcoin.
Oh yeah, I mean, well, there's such a massive con running right now between like it's a metronome between Bitcoin and AI, and now
I
quantum.
mean, our
Right?
our incoming political incumbents that are pumping Bitcoin because they don't report their holdings.
Yeah,
Yeah.
pretty much. So it's a gigantic fucking scam. So it all sucks. It'll make sense one day though. Once the 20-year hits 6%, everything will make sense again.
I hope so. All right, guys. Thank you for tuning in, Dork. Thanks for showing up, man. I
Thanks for
hope
having me.
everybody enjoys the rest of their day and the rest of their weekend. And I'll see you all tomorrow morning. Pickles Picks will be out as usual tonight at some point or tomorrow morning. Later, guys.